Welcome back to Yahoo Finance Live, everyone. Let's dive into the housing sector as findings from Redfin show purchases for vacation homes may be decelerating, which could provide a much-needed price reprieve for some home seekers. Meanwhile, you've got Zillow projecting limited inventory driving high home prices through 2024. Joining us now is Nicole Bachaud, who is the Zillow Economist, joining us here today. Nicole, great to have you here. I'd love to get some of your insights, particularly around the housing market and where buyers have the best opportunity to get homes right now.
Yeah, so we're seeing intense competition continuing throughout this spring in much of the country. Really we're seeing, a lot of folks shifting towards, more affordable homes, especially as interest rates are going up. We're likely going to see a lot of competition around those starter home prices as, it offers a little bit more affordable options for people now that rates are so high. We're going to continue to see demand really accelerating throughout much of the Sun Belt. That's been the hot market for most of the last 2 years. A lot of our coastal expensive metros have not been able to keep up at quite such high, year-over-year appreciation levels, but still those markets are a lot more expensive. So there's not really very many opportunities for, super cheap markets that the buyers are going to be able to get into. We're seeing a lot of competition everywhere.
This is typically one of the biggest and long-term investments that people, households, families can get into on the real estate front. And so with that in mind, with high prices perhaps barring some people from being able to execute on those purchase plans, how much more of an economic impact does that create longer term?
Yeah, absolutely. We're going to see a lot of people maybe taking a step back from the for sale market as rates are rising right now and staying in the rental market for longer. That's going to continue to push rental rates up. Nationally, rents are up over 17% year over year, which is a really large number for, when you're going to re-sign your lease. That's hundreds of dollars a month that a lot of people are now having to fork over in addition to their existing rent payments. That's going to take a big bite out of people's budgets as they're, maybe trying to save up for a down payment in the future. We're going to continue to see rent prices going up as demand for that rental market stays elevated, particularly single family and larger rentals. We're going to see a lot of demand in those areas as well. So this is going to put renters in a really challenging position to be able to try and save up to afford housing while they're facing these really high rental rates.
Just for the added context of this conversation, perhaps you can compare and contrast the difference that we're seeing right now in existing homes that are on the market for sale versus some of the new homes that are struggling to get the necessary, not just inventory online, but the parts necessary to actually build out the homes as well as part of the supply chain headwinds that they've been facing.
Absolutely. New construction was down for, over a decade following the Great Recession, which really led to the big inventory drop that we've been seeing in recent years. Builders have started to really ramp up and are trying, at their best rates to really meet the demand that we're seeing. But as you mentioned, supply chain shortages are really disrupting their ability to get those homes onto the market. Even a couple of months delay for the typical new construction home, it is months later in the market that those homes are finally, reaching the buyers that need them. At the same time, existing homeowners have been really unwilling to sell throughout much of the pandemic. A lot of uncertainty of their next housing choices, their long-term work from home guidance, or what that looks like. And so we're going to continue to see inventory, taking a big hit. Hopefully, as we move into the spring, we'll likely see, March inventory numbers coming back up, both in terms of new construction and existing homes coming onto the market. And so that will help to, help later on this year to help soften those price growth.
We've heard about new ways of building homes, everything from 3D printed homes all the way to, and our colleague Rochelle had introduced us to Boxable, which hopefully we'll be able to get on the program in some future days. But when we think about the new ways that homes can come to fruition to really eliminate some of those supply chain headaches, does this kind of create that next inflection point for the new types of homes, especially on the low income side, that we're seeing able to be created and that much more quickly and added to the market?
Absolutely. Previous surveys that we've done of experts in this field have shown that, adding more inventory is really the best and fastest way to help to reduce the price growth that we're seeing and really create affordable opportunities for people. Whether that comes through relaxing zoning regulations, which would be more on the policy side, or technological advancements, that's really going to be a key thing to watch as we're looking forward in the coming years for the market to return to, whatever the level of normalcy is going to look like then. Inventory is really going to be the key player.
It's been such a pleasure to have this conversation with you, Nicole. Would love to have you back to continue the conversation, especially at this a very important time for the housing and home sector as well. Nicole Bachaud, who is the Zillow Economist, joining us here today. Appreciate it.